It's time for a silver market update. So in the last month or so, the silver price in US dollars has had a pretty nice rally. Silver is at $16.23 when we're doing this live stream show on Saturday, July 20th. And in addition to that, the silver market has had a very interesting week. Let me read a quote from my friend Peter Spina over at GoldSeek. And this is interesting stuff. So he says it's been a weekly record of silver buying in question mark, nearly 20 million ounces added to ETFs or exchange traded funds, depositories, and mutual funds. And as Ed Steer points out, weekly mined silver is just over 16 million ounces, but 90% of the mines silver is used for, okay, he has bad grammar here, but 90% of the silver mined is used for industrial purposes. And then where is the investment silver coming from? So an interesting chart here if you want to take a look at that on Peter Spina's of GoldSeek, his Twitter. So really what I would say is that things are really starting to look up for silver, and we could see potentially by the end of the year silver over $18 if this continues. Now, I did some research before this live stream show, and I found on July 12th, 2019, a interesting article from Alistair McLeod. He's a head of research at Gold Money for the research department. And he was talking about digging into the weekly commitment of traders reports covering COMEX silver futures. And he sees something very odd indeed. The largest four traders, normally bullion banks or major producers hedging future output, almost always run short positions against speculators' longs. The more bullish speculators are, the more shorts are carried by the big four, the bullion banks, also called the bullion banks, to accommodate them. Equally, they only go net long when the speculators are extremely bearish and are collectively marginally long or exceptionally net short. So recently, though, the following chart of the largest four traders' net position shows that they're starting to actually go really, really long. And it seems to have bottomed at the beginning of 2019, and they've started to go long. We're at a gold to silver ratio, I just did the math here right before I turned on the live stream show, at right around 88. So a lot of people do not trade on the gold to silver ratio. I've heard a lot of people say that you can lose a lot of money on the gold to silver ratio. What this would tell me, and this is not financial advice, is that a lot of the primary silver miners are in big, big trouble. A lot of them have switched to investments into gold, and that if you are a longer-term speculator or a longer-term investor, if you accumulate silver now, you could eventually trade that silver for gold in the future. So as the gold to silver ratio starts to favor silver again at some point, then it will be advantageous to trade those ounces in if you have the right bullion dealer. Some bullion dealers let you do this without much, if any, commissions. You can trade your silver for gold and vice versa if you know how to play the ratio. I think David McIlvaney's gold bullion dealer does this. So the rest of Alistair McLeod's article is very interesting, talking about how some of the bullion banks are starting to really go long silver futures and speculating, I think, also about a Chinese buyer, why the trail of evidence leads to China. But he also recently did, and I think Alistair McLeod's a smart guy. I think he's way too bullish on China about their global, how their economy is doing. But he's also claimed that China has, 20,000, 30,000, just a massive amounts. It's very tough to actually prove this, that they have this amount of physical gold. Now, the Shanghai Gold Exchange does have numbers that say that all this gold is being withdrawn, but my China source has said that a lot of that gold at the Shanghai Gold Exchange is actually not withdrawn, and a lot of that data is probably fake. But there is a lot of demand at retail shops for physical bullion in China, but it seems that a lot of the data from the Shanghai Gold Exchange that the gold community has spent a lot of time on may not actually be real. But Alistair McLeod has done an interview recently. It was on another channel talking about a lot of the gold community and silver community are also talking about this. And if you go back and listen to interviews and articles and blog posts from the gold and silver community, there's always, a silver whale. It's been, from being in the gold community now for a decade, I personally think that there's many hundreds of articles about a silver whale over the years, over the last 10 years, if not more than hundreds. There might even be 1,000 if you went back and actually researched this. But I want to give you guys a warning about these silver whales that are accumulating lots of silver futures contracts, paper futures contracts on the COMEX. And this has to go back, we have to go back to financial history. And also, a lot of people who are claiming this silver whale stuff, they either ignore financial history and what happened to the Hunt brothers, what happened to Nelson Bunker Hunt and his brother. And there's the truth about that, and then there's the lies that the mainstream and propaganda that the mainstream financial media and mainstream media tell about the Hunt brothers. So first, let me give you a quick historical background. So the Hunt brothers are from a big oil family. If you're not familiar with them, I believe oil tycoon H.L. Hunt. I have up the Wikipedia articles about the Hunt brothers, and I'm just going to talk about their background. So they were oil men. Nelson Bunker Hunt and his brother William Herbert and Lamar Hunt grew up in an oil family. Their oil tycoon, I believe their father was H.L. Hunt. So this is a successful oil driller family, and they made a lot of money. And Bunker Hunt, Nelson Bunker Hunt, he died in 2014, so there was a lot of interesting articles that came out about him. And I have, through my research, I found, I think, like 4 or 5 really, really good articles that told there's more of them. Michael Maloney has a video out about the truth about the Hunt brothers. Jim Sinclair was actually directly there. I believe he was hired by the U.S. Treasury and the bullion banks to liquidate the Hunt brothers' positions. And the lies that have been told about what really happened to the Hunt brothers is total bullshit. They were screwed over. The Hunt brothers were screwed over as bad or worse than what happened with Ross Ulbricht and the Silk Road. Okay, if you want to know the truth about what really happened to Ross Ulbricht and the Silk Road, listen to speeches from his mom or go to the website Free Ross. And the Hunt brothers were really, really, really screwed over by what happened with the silver price manipulation. I wouldn't call it manipulation, but it was labeled manipulation. So with what they did, accumulating silver as futures contracts. Now, I believe the Hunt brothers also were too greedy, but they were scapegoated for being blamed for inflation, and a lot of the story that's out there in public about what really happened to them is just not true. It's pure propaganda. A lot of the people that were involved with what actually did happen to the Hunt brothers in the 70s and 1980 are dead now, unfortunately. And there was a book that came out. I have this article out about a book that came out by Stephen Fay called Beyond Greed. But I skimmed through the summary of the book, and the book sounds like total bullshit. Okay? It sounds like blaming the Hunt brothers for all the problems in the silver market and the gold market and manipulation, but there was not really good research there. So the Hunt brothers were big oil men. They had a lot of money. They truly believed, they were against the Federal Reserve. They did believe that the dollar was going to collapse, and they were heavily investing in commodities besides oil. So they had a lot of oil contacts, whether it was OPEC, the Saudi sheiks, and others. And so they were accumulating commodities. They were buying a lot of physical silver. They had planned to open a silver mine, but what got the Hunt brothers in trouble was greed and leverage, and then the Wall Street bullion banks, the Federal Reserve, and the U.S. Treasury changing the rules on the Hunt brothers. They were totally screwed. So if you're not familiar with the history of gold and silver's futures contracts, it starts with Nixon closing the gold window to the international gold standard in 1971, and then the elites here, the economic and political elites, and the Wall Street banks by 1973, I believe, had launched the futures contracts for gold and silver, 73, 74. Before American citizens could officially buy them, they were planning on launching futures contracts. And if you're not familiar with the details of the futures market on the COMEX for gold or silver, gold and silver are the only two commodities where there are very strict position limits on the long side. Okay, so very, very strict position limits on the long side. I have been up to Toronto at Sprott headquarters and spoken with people who run the Sprott Physical Silver Trust, and they have bought a lot of silver. And it took back in, I think, 2011 Actually, I can't remember the exact date when the Sprott Physical Silver Trust did an enormous silver buy, and it took a lot longer than it should have, given how much the COMEX was claiming had metal in their inventories. It took 6 months longer or more than it should have taken, given what the COMEX was claiming in their inventories. But I specifically asked the Sprott people, a couple different Sprott employees, including people who are in charge of running the Sprott Physical Silver Trust, why they would not buy a bunch of long silver futures contracts and stand for delivery, and they straight up told me that if they tried to do that, they would be risking going to prison. So because of the strictly enforced position limits and the government changing the rules, there could be increased in margin requirements and also criminal charges and large lawsuits and fines for trying to massively become a silver whale. And so the Hunt brothers were the original silver whales. They accumulated way too many silver's futures contracts out of greed. And they accumulated, I believe, at one point, 80% of all the silver's futures contracts. If you want to see the exact number and more details of the story, it's in these articles that I will put in the information section after the show is over, if you want to read about this. The other person who has good knowledge of this is Jim Sinclair, because he was hired. And none of the mainstream sources that talk about the Hunt brothers and how badly they were screwed talk about how the exchanges, the Wall Street bullion banks, the Federal Reserve, and the U.S. Treasury shut down the silver market, and there was not buyers and sellers for weeks. There was net liquidation days, short only, selling only, no long days. Okay, that's not a market. That's not a market where people buy and sell. These are the economic and political elites in power when the silver price was going crazy, saying, we don't have the silver, the Hunt brothers are making too much money off of us, and it's time to change the rules, screw them over, and then we're going to sue them, potentially throw them in prison, take a lot of their money. And the Hunt brothers did not go bankrupt, but they lost a lot of their fortune. I believe they still own the Kansas City Chiefs football team, which is worth a lot of money. And they still own a lot of oil wells, but they were sued a ton. They were fined a ton. They took a lot of shit for trying to, what they thought was the right thing, getting enormous exposure to silver, and they tried to play in a game that the Wall Street bullion banks, the Treasury, and the Federal Reserve can change the rules. So you're seeing people, and I don't want to pick on Alasdair Macleod too much, because there's, like I said, there's been hundreds of articles and blog posts talking about silver whales coming in and blowing up the COMEX. Turd Ferguson of TF Metals talks about this all the time. He's talked about a silver OPEC cartel or something like that, which is just ridiculous. Yeah, thank you for liking the video. I appreciate it. But the bottom line is, and I haven't heard any of these guys talk about it, if you tried to do that with the position limits, the strict position limits, even if you're a Canadian citizen or a Canadian company on the long side for the silver futures market, you're risking fines, you're risking lawsuits, massive amounts of ones, and you're risking going to prison to try to do that. Massive amounts of problems. And this is why, and I love Eric Sprott and I love the people at Sprott, but if I was them, I wouldn't do it either. I would not try to bust the COMEX either. It's not worth, after seeing how the Hunt brothers were done that dirty. They were screwed so bad. You know, the life is not fair, but what happened to the Hunt brothers is one of the worst travesties in American history, along with what happened to Ross Ulbricht and the Silk Road. Just unbelievable. And almost all the information in the mainstream media, and almost all the information about it in the mainstream financial media, is a total lie and total propaganda. So I have a bunch of, like I said, articles if you want to go into more detail about this, but for a silver whale to accumulate that many futures contracts, for an individual person, not a bullion bank, to do it, they are risking prison. They are risking fines. They are risking lawsuits to try to bust the COMEX. If you're a billionaire and you've studied the silver market at all, whether you're American, Canadian, foreign, Chinese, you would not want to do this on the COMEX. You would stay away. You would accumulate physical silver, you would buy mining shares, but you would stay away from the silver's futures contracts because they could easily do what they did to the Hunt brothers. They did it on a smaller scale in 2011. They raised the margin requirements like crazy. There was physical silver deliveries of 1 ton that were delayed more than 6 months in 2011 when the silver price was in the 40s. So I know someone who took delivery of 1 ton of silver on a COMEX contract. Jim Poplava of Financial Sense. He had to wait over 6 months when the COMEX claimed they had all the metal in the warehouse. Okay? This is the problem with the gold and silver market, and a problem in general with the gold and silver community. There's always the silver whale, and I'm warning you, beware of silver whales. Okay? The silver whale story, it's the red herring. It doesn't matter. Okay? Because go back and look at the articles, the podcasts. There's too many of these things. So silver will have its day, or the miners will go bankrupt. It's plain and simple. If silver goes lower, the miners will not be able to raise capital. And the miners will not be able to maintain production. The bullion banks are fighting a war on 2 fronts. They have to maintain the level of silver production. They cannot let that fall, of physical silver. And they also try to manage the price and to manage retreat, like James Turk says. So it's a tightrope. It's a very fine line that they have to walk. They're fighting a war on 2 fronts. They cannot let the physical silver supply drop a lot, which means they cannot let base metal prices crash, because then the majority of the physical silver market, about 2/3 of it, up to 70%, depending on some estimates, is from base metal miners, a silver byproduct, and they don't care about the silver price. So, again, I respect Alasdair Macleod, but beware of the silver whale. The silver whale, anyone who is a billionaire, anyone who does any research on this, talk to the Sprott people. I'm not sure if they would tell you the truth about this. This was the off-the-record conversation. And I love the people at Sprott, but they're smart for not doing this. It's not worth going to prison. It's not worth being sued by dozens and dozens of people, like how the Hunt brothers were done dirty. And it's not worth being scapegoated and blamed and having books written about you saying how you're evil when you're just trying to protect your wealth by going long silver's future. The Hunt brothers do deserve some blame because they were too greedy and they were long all those silver's futures contracts, and then the rules got changed on them. And there was no market anymore. The exchanges, the Treasury and the Federal Reserve and the bullion banks decided that the Hunt brothers were going to mess them up and make too many billions of dollars off them. Back then, I believe the Hunt brothers had at one point $14 billion worth of profits, approximately, worth of silver futures contract profits. And they changed the rules. There was no market. There was selling only. Go look up what Jim Sinclair said. Jim Sinclair might be one of the only few people that's still alive who was involved in this at this point. So I think I'm pretty much done with my rant for right now, and eventually the silver miners will have their day. There has been some rallies recently this week in silver miners, but be careful about listening to the silver whale stuff. Okay, we could see silver by the end of the year, maybe above 18. The silver miners are not going to be making massive amounts of money at that price. And these, again, this is not financial advice, but if the silver price does go to $18 to $21 per share, 18 to 21 per ounce range in US dollars, a lot of the miners will start to raise capital. We have not seen those massive 70 million, 100 million, 150 million, $200 million capital raises yet. We will. The miners, a lot of the primary silver miners have really, really bad balance sheets. And that's after diluting shareholders and buying primary gold mines that are mediocre or worse, and then lying about their costs, all in sustaining costs. So hopefully I've done enough of a history lesson here. The original silver whales were the Hunt brothers. Okay, go back if you want to learn about the silver market and the gold market, what really happened, and the position limits. The position limits were put in, and the paper price market was put in for control. So the COMEX futures was put in, I believe, before American citizens were technically allowed to own physical gold again. They had COMEX futures contracts. Okay, this is an interesting post here. Mining stocks could crash in a depression, but then you would have central banks all increase QE again. So gold prices and gold miners may rally. So in a scenario like that, yes, gold was sold off a lot, and so were gold miners in 2008 and 9, but then they also rallied very quickly in a very high percentage. So they would be very, very volatile. And there would be, this is not financial advice, there would also be options opportunities. with the volatility, with puts and calls, hedging strategies, and if you have cash on the sidelines to buy money shares even cheaper. Exactly. In a depression, the world will devalue currencies even faster, and some people will run to gold, silver, and some people will run to Bitcoin, or a combination of those things. So I think if you want to go into more depth about the Hunt brothers, there is a lot of good information out there. I will try to find that Michael Maloney video and put it at the end of this live stream show after the show is done. So he did an expose going through the truth about the Hunt brothers, and I found also a pretty good video from Chris Duane at The Greatest Truth Never Told about the real story of the Hunt brothers too. He has 2 parts that have almost 100,000 views. So that's the bottom line. So whenever someone says silver whale, I want you guys to be very skeptical, because the original silver whales in the United States were the Hunt brothers, and they were totally screwed over. They were totally railroaded. They were done really, really dirty. Okay, guys, well, that's it for right now. Everyone have a great rest of your weekend. Oh, actually, one more thing. So I was thinking of doing this. I came up with this idea in the afternoon, and I've been thinking about it for hours. So I was debating doing a video similar in quality to Eat the Rich about socialism, and then also about how quickly is the U.S. national debt growing. And if you're not aware of those 2 videos, you can go and look that up. The Eat the Rich video was incredibly censored by YouTube. I spent over 8 hours of work doing that, with the research, putting the slide deck together, recording the audio, editing the audio. It's a lot of work for me. So I was debating doing another really high quality short video of approximately 30 minutes, give or take, of the greatest risks to the global economy, and then also how the markets have been saved with rules changes and other emergency liquidity programs and central bank balance sheets, and going into detail about things like that. So if you want to see a video like that, it's so much work. I think it would take well over 10 hours, maybe even over 12 hours of work for me to do all the things that need to do to release a quality video like that. And honestly, I'm really tired of working for free for a video of that quality. So I'll give you guys a challenge. If you want me to do a video like that, figure out a way to crowdfund and get me $1,000 raised, either in donations of $5, $10, you donate some money to my Patreon, or one-time donations on my website via PayPal. And if I get $1,000 or more raised, I will do that video, and I will try to get it out in a couple weeks. So if you really want a detailed video going through all the $65 trillion plus that has been created since 2008, according to my estimates, and all the big risks, going into detail about the global economy, including like the U.S. corporate bond market and the over-the-counter derivatives and the euro dollar and things like that. If you want me to go in depth and show you guys a really good slide deck with good audio and all that analysis in there of about 30 minutes that would be pretty high quality, then I should probably get paid a little bit more money for that. At least pay my bills for a month, because that would require a lot of work on my part. I'd pretty much have to stop a lot of the other things I had planned doing. So let me know, give me feedback if you're interested in helping me raise the money. Maybe we should do a Kickstarter campaign and get the money done for that, and then make a short little video. It wouldn't be a documentary, but it would be approximately 30 minutes, and it would be right on there in quality with Eat the Rich, and also how quickly is the U.S. national debt growing. I got a lot more views on how quickly is the how quickly the U.S. national debt is growing. I think that's a really quality video that most people can understand. So in about 20 minutes, you can see that the Federal Reserve is going to have to manipulate interest rates lower, because the interest payments on the national debt are already a problem. They're going to get worse, and even though we're not in any more big wars, and Trump has been running supply side economics, and God forbid we get another president who wants MMT, the national debt is already growing at $1 trillion per year, give or take. So, and it's probably going to keep increasing at an increasing rate. So I haven't seen anyone else in the gold community or alternative media do videos close to that quality. I've seen a lot of lesser quality stuff out lately, especially with like all these people doing silver whale videos now getting 10,000, 20,000, 30,000 views. Okay, guys, well, that's it for right now. Bye.